Now, joining us for more on the health of the consumer specifically is Eric Clark. He's portfolio manager of Logo ETF, LOGO. He's also CIO at AccuVest Global Advisors. He's going to give us his read on which are the best consumer stocks to keep an eye on in 2026. So we saw many consumer stocks take a little bit of a hit this year, Eric, thanks to tariffs and the uncertainty around them. And that uncertainty, some of it is still there. What are the ones that are potentially the winners in 2026?
Well, Happy New Year, Vonnie. You know, I agree. You know, some of things have continued. We're still waiting for some tariff news from IEEPA, but the K-shaped economy that everybody keeps talking about is certainly still intact. The upper part of the K, the higher income with real assets and homes, they're doing pretty well and they're spending really well. And then the lower income cohorts are struggling because inflation is still present in a lot of parts of our lives. So, you know, we still love Walmart. We still think it deserves to be part of the $1 trillion club. We think that probably happens in 2026. We love any brand that's serving people looking for value. So that would be Costco on sale. TJ Maxx at all-time highs still looks great to us. And then there's interesting little stories within retail that are kind of idiosyncratic, like a Warby Parker, which has super store growth similar to Five Below. And that tends to be when retailer stocks tend to do well when there's a lot of store growth. And Warby's got a lot of growth ahead. Plus they have this partnership with Google on the AI eyeglasses that'll happen later this year, which will drive traffic. So lots of good, interesting things in retail, but not broad, I would say.
What about one that had been, you know, an old stalwart at this point, as unbelievable as it is to say, but it's actually only up 5% year over year, and that's Amazon?
You know, it's a mystery. The business is firing on all cylinders. I think people love to just point to the CapEx spend, but that spending is happening at Microsoft. It's happening at Meta. It's very odd because Amazon in particular has a history of spending free cash flow when they have it for good ROI growth. And so sometimes the stock can lag when they're spending, and then when they start monetizing, the stock rips back. So I would urge people to keep buying Amazon while it's down, because we have a pretty good read on their ability to monetize. And last quarter was terrific across retail, across ads, across AWS, and the market's giving it no credit whatsoever, which in the end, earnings and sales are what drive stocks. And so we feel pretty good about the quarter coming up.
What about Netflix? How are you thinking about a lot of these streaming giants? Of course, we've been talking so much about this push and pull between Netflix and Paramount Skydance vying for Warner Brothers Discovery. What's your thoughts on Netflix?
Well, listen, you know, short term, people love to push the name around because there's going to be a lot of uncertainty with if they take Warner, or if the bid is going to. I don't think they're going to do a new bid. I don't think they have to. It's been pretty clear that Warner wants to go with Netflix because having that IP in Netflix's hands is a much better opportunity to monetize that. So again, with the same analogy with Amazon, you buy Netflix while it's down. They're going to have a monster quarter. I think they're going to have a great 2026. And right now, you know, people are ignoring it because of the uncertainty around the deal, and kind of an arbitrage. You know, buy Warner and sell Netflix. But from a business perspective, they're firing on all cylinders.
I want to talk a bit more about the consumer in the backdrop of this economy that we're dealing with. We've been seeing a streak of declining consumer sentiment, confidence. What does this really tell you about U.S. consumers' willingness to spend, specifically on discretionary items?
Well, the old adage, don't listen to what consumers say, watch what they do. Retail sales has been strong, but again, it's not been broad. There is definitely is this item an interesting item? If it's discretionary, do I love it? Is this brand I'm fiercely loyal to? If so, I will spend. If not, then I'll look for ways to save money. And so I think we're just going to be in that world where consumers are being very choiceful, and consumer sentiment at all-time lows with markets close to all-time highs. Retail sales still doing well is a very odd phenomenon. And I think it's related to, the inflation that we still feel. Plus, there is some job question about AI and will my job be be replaced by AI. And so, you know, consumer sentiment historically, when sentiment's this low, forward returns for markets tend to be pretty good. It's just been very interesting to see sentiment this low for this long, which is a rarity.
Yeah, thank you so much. Of course, that's Eric Clark, portfolio manager at Logo ETF, that's LOGO ETF, and CIO at AccuVest Global Advisors.